Welcome to This Explainer. Today, we're jumping right into the math behind the standard tax burden and mapping out the exact legal strategies tax experts use to preserve wealth. Look, if you've ever stared at your pay stub and wondered where on earth a massive chunk of your hard-earned money just vanished to, you are absolutely in the right place. All right, let's dive into Section 1, the sitting duck trap. Why your paycheck is the most taxed asset. The source material kicks off with a really provocative question directed squarely at standard salaried employees. Do you ever feel like a sitting duck for the IRS? It's a pretty powerful image, right? Because when you're a W-2 employee, you aren't actively negotiating your tax bill at the end of the year. Instead, the system is designed so that the money is extracted before it ever even reaches your bank account. You're just kind of sitting there, completely exposed to the prevailing tax rates without much of a shield at all. The author actually goes a step further, stating directly that in 2026, the W-2 is a financial prison. According to the source, relying solely on everyday labor income has become incredibly restrictive. And yeah, that terminology is stark, calling it a prison, but they argue the government is essentially siphoning off your wealth right from the very top. Think about that contrast for a second. You are doing absolutely all the labor. You're putting in those grueling hours, yet the government automatically takes its mandatory cut first. That basically leaves you trying to build your entire life and your wealth with just whatever happens to be left over. The source defines this specific condition as being fully taxed. When you're a standard W-2 employee, your taxes are deducted directly from your paycheck prior to you even receiving it. The author literally calls standard labor income the most taxed asset in America. Why? Well, because you have zero control over that initial government cut. You can't deduct your daily operating expenses of, just living life before paying taxes on your salary. The gross number is what it is, and the net number is all you actually get to keep. Moving right along to Section 2, Economic Reality and Debt. The CPA's reality check. $39 trillion. Just let that staggering government debt number sink in for a second. Because of this monumental debt load, the government relies incredibly heavily on your standard, predictable payroll taxes, just to stay afloat and make its own minimum payments. So your W-2 tax withholdings are essentially this consistent, reliable engine, keeping their whole system moving. Because of this dynamic, the explainer notes, we're living in what CPA Brian calls economic theater. Everyday workers, those sitting ducks we just talked about, bear the vast, predictable burden of keeping the government funded. Meanwhile, the ultra-wealthy are playing an entirely different game. The source points out that billionaires use complex, inaccessible structures like offshore entities to drastically minimize their tax burden. The everyday W-2 worker simply doesn't have the capital or the legal access to those same loopholes, which creates this massive disparity in how wealth is retained. This perfectly illustrates the stark contrast the source makes. On the labor income side, the W-2, you are fully taxed. You're a sitting duck, and the government always takes the first cut. But on the business income side, things like 1099s or offshore structures, you unlock an entire world of deductions. It represents the exact strategies used by billionaires to not just get wealthy, but to stay wealthy. The core message here is that the tax code treats these two types of income fundamentally differently. And to preserve your wealth, you really need to understand how to operate on the business side of this equation. All right, Section 3, Defensive W-4 Tax Strategies, Breaking the Siphon Legally. So how do we break the siphon of this W-2 prison? Well, the source provides a really clear, actionable checklist of pre-tax buckets you absolutely must utilize. Think of this as your defense. By maximizing health savings accounts, utilizing flexible spending accounts, and fully funding your 401ks, you are legally paying for your life expenses and future savings before the IRS takes its cut. You are essentially shrinking the pool of money that the government is allowed to tax. It's a fantastic way to reclaim control over your gross income, dollar by legal dollar. Now, a crucial defensive tactic the author really stresses here is proactively fixing your W-4 settings. A lot of people fill out this form on their very first day of work and then completely forget about it. But the source warns that if this isn't optimized, you could easily be hit with what they call sneaky underpayment penalties from the IRS. Or on the flip side, if you overpay, you're essentially giving the government a 0% interest loan of your own money all year long. How generous of you, right? Actively managing your W-4 is literally your first line of defense in making sure you keep exactly what is legally yours right when you earn it. Let's move to Section 4, the 1099 Wealth Fortress, transitioning from defense to offense. Here is how all of this builds into a comprehensive strategy. The author argues that playing defense just isn't enough. You need an offense. Step 1 is doing what we just talked about, maximizing those W-2 pre-tax buckets. But step 2 is the real game changer, adding a 1099 side hustle. Why? Because that leads directly into step 3, which is unlocking business deductions. The source firmly asserts that generating business income is the only way for everyday people to truly unlock the types of wealth-preserving deductions that billionaires use. By having a 1099, part of your everyday life actually becomes a business expense, which drastically changes your overall tax math. The author uses a fantastic phrase here, urging you not to let the tax siphon stall your 100K wealth explosion. Look, when you're losing a massive percentage of your income right off the top, it acts as a huge drag on your ability to compound your wealth. But by playing defense with your W-2 and offense with a 1099, you're legally shielding every possible dollar. You are effectively stopping the siphon, which the source claims is the absolute key to accelerating your wealth and hitting that explosive growth. Building this financial fortress, as CPA Brian calls it, definitely isn't going to happen by accident. It requires strict discipline. You have to absolutely own your personal financial math, because honestly, nobody else is going to optimize it for you. You've got to proactively shield every legal dollar using the tax code to your advantage, exactly like a business would. And finally, you have to keep the truth in your corner. That means ignoring the economic theater and truly understanding how the system actually operates behind the scenes. We've covered a lot of ground in this explainer today, looking at the stark realities of standard employment income and the specific strategies, both defensive and offensive, presented by the source to protect your hard-earned money. So, based on these strategies designed to shift you from being fully taxed to fully optimized, my final question for you is this: what exact actionable step will you take today to start building your very own tax fortress? Thanks for joining me, and we'll see you next time.